Hello everyone and welcome to another article video. If you're new to the channel, my name is Meydan. I'm a finance professional and also a fintech entrepreneur on how to time the financial markets. And today we're going to take a look at a very unique indicator that we use when timing and pricing the market, and it's called the PST indicator. And this is the article for it. If you're into reading, you can always go to globaltrader.club here and just click on this article. So let's see what this PST is all about. Now, when we're trading, we want to make sure that we enter trades at a good price, because price is half of everything, but timing is the other half. So we want to walk on two legs, and the Global Trader Club, what we want to know is we want to know the swing days in advance, we want to know the trading hours in advance, and we also want to have a decent price so we can get in at a good price and then have smaller stop losses and have a bigger profit target. So knowing the swing days and the swing hours are obviously a great bonus, but obviously sometimes you can get the swing days and the swing hours wrong. Okay, so what's going to help us there? Well, was the price good? Because if the price is good at those days and hours, then your risk is minimum and your return is maxed out, and you can make a lot of profit then. And we'll see how it pans out here. So here we are. Exact pricing. Now, normally when we have technical analysis methods, we talk about a range, and I also talk about ranges. I say, look, this is the zone where we want to be thinking about selling, this is a zone where we want to be thinking about buying, but I also note PST prices when it's close by or it's in reach of the market as a target, and also as a place of entry if we're looking for a reversal. Having an exact price kind of like gets rid of all the cloudiness and all the setup waiting, because if price and time match, that's it. That's your price, that's your time, that's when you need to trade. So understanding that we have a time and a price correlation is really good, and then they match, they correlate, then you're going to get a very good trade. Now, I developed the PST indicator over a long period because I was very frustrated with all the indicators, and there was actually when I started trading there was an encyclopedia about indicators, and there were like 100,000 indicators in there at that time, and this is like 25 years ago. So I'm thinking like, well, which one are you going to choose? And after going through a lot of them, what I noticed was like there are a lot of lines, but there are no prices. And if you take a look at all of the indicators, they're all based on historical events. Like moving averages are always used because the market is really going according to moving averages and what the price did before. If it does it again, like support resistance or demand supply zones, we can buy or sell in those zones. That's all great, but is that really going to fall on a swing day or a swing hour? And what would be the decent price to get into that trade so we can be spot on? And none of the indicators really gave me pricing, so I had to come up with one, and that's what PST is. So first of all, we're not lagging. Okay, always on the chart we must have pricing. So for example, this is gold, and in fact I've got a trade open on that one. Now when people do technical analysis, this is the technical analysis standard format. Okay, and if I know that there are swing days ahead, which I do know, which is going to be Thursday and Friday. Let me mark that in. So today's Wednesday, and I don't have a swing day today, okay? But I do have a swing day Thursday or Friday. Now, knowing this is good information simply because, okay, if we go in that direction, we should get to these higher levels, and according to pricing, that should be around 3,397, right? This is what technical analysis normally would lead us to assume and to think, and that's fine. We should calculate that, but we should also be looking at a PST price, which is for us down here, as you can see. Now that PST price is a value of 58, which converts to 3,391. So on that trade for gold, I've got that target at 3,390. Okay, so if this thing pans out according to my thesis, okay, I should head off over there. And in fact, this is a trade I posted today also in the members area, all right, which was here. I actually entered the trade and I posted it immediately, but by the time I actually posted this, because I took the screenshot, put the box and the arrows and stuff, it had already covered the trade. Okay, so that's good to know. Why? Because I've taken a small stop loss, because if the time is right, okay, then I should be okay. Now also you can see a PST, price indicator, here also on a smaller time frame. Let me refresh that. This is for the MetaTrader 4. Now if I'm going to enter a trade here, I also like to see what's going on here, because this also gives me levels. So if I'm to enter a trade, let's say from the lows here, I know what I should be targeting, because I've got a red line there and it's got a level called 68, and it says to me, listen, if this setup continues, we should get to 3,348. So knowing that in advance is good, and having known that, I can cover the trade, and that's 3,348 over here. In fact, it says 3,348.32, and this is around there, and that's exactly pretty much where the market went and stopped. So it did that target in this little 15-minute time frame, which is great to know. Why? Because you cover the trade, you can move your stop loss and adjust your stop losses. Also, if I understand if I'm going to enter a trade here, I should also know how far the market can come back into. So if in the trading hours I was down here on a PST, I'd enter exactly at the 42, which would be like 3,344, sorry, 3,334, not 44, as you can see up here. All right. So then I've got entries at trade hours, I've got targets, and if I go above levels, I know what other targets I can get to. Now this is a 15-minute chart. It won't repaint. It will constantly update itself as conditions change. The same thing will happen with the daily. Every time the market conditions change, this will adapt. The same thing on the weekly. Now on the weekly, this is a really, really nice setup here, because on the price, as you can see, we've got a breakout. And on the weekly PST, a good level to go in if you want to go up with that is a 65 zone. 65.20 was 3,309 this week. Now because that's weekly, all week that's going to stay there. Now the market came down into 3,309 is there. Okay, that's 3,309. It made lower, slightly lower actually, into 3,293. Okay, so went down a little bit and then bounced straight back up. So this price zone was okay because it was a weekly support, and because the market came straight back up, you can see here, right, the market, let's do that, the market came down, went straight back up into that 3,309, and look what happened here. These are your trading hours. What's happened at the trading hours? The market just went up. Okay, so knowing these hours with the pricing is important, because if you're at a weekly level, then knowing the trade hours is good, because you can look for a reversal, and the trading hours will make sure you trade at the right time, and you'll also get pricing from the PST as well on the intraday session. So whether you use this on a 4-hour, 1 hour, 15-minute, 5-minute. I've even got people using it on 1 minute to scalp the market at the trading hour, because if you got price and time on your side, then you can just do them together. And look at all these hours, for example. Okay, this is Tuesday yesterday. Trade hour, look how the market's moving up. Trade hour here, the market's moving up. Again, trade hour, market moving up, and then coming down into the trade hour. So all of these trade hours are like important. And also with today, when I looked at the trading hour here, I said, how can I enter this trade with a 1-bar stop loss and also at a decent price without taking a big risk? Now this here is 1 to 10. okay, and the trade is already covered, so I don't care because I always enter with two trades. One covers the trade, the other one goes all the way. And the reason I've got that is because, like I said, it was on the PST indicator. So if we go back into the article, having an indicator which is not lagging, having an indicator which is giving you exactly a price without any all this vagueness, that is great. And we're also looking at things from a breakout or in fact a support resistance zone as well. So if the market breaks out, if a PST indicator breaks out, you'll often see me in the videos saying, look, I want to be careful here because when a PST indicator breaks out, I don't like standing in front of it. If it's a sell zone or a buy zone, I will still say that. I'll say be cautious, wait for another setup, or just check your technical analysis. And if you see a sign that the market is reversing according to your technical analysis, then definitely go and do that. All right, I'm back after a phone call. So let's see, with PST, having a price-based indicator is sharper and also less stressful. You know where you're at. You got precise entries, defined stop loss, clear profit targets, less noise, more clarity. This will also reduce your stress when trading. You have a price, you have a swing day, you have a trade hour. If they match, you trade. If they don't, you don't. There's not the question. So the PST will work like this. When we have swing highs and swing lows, the PST indicator will give us price targets. We are going to a price, and on the monthly, weekly, daily, we want to know what that is. Because if we're in that direction, we're probably going to take profit at those levels. And if we're looking to reverse on a swing day and a swing hour, we want to be doing it at those price levels. So knowing these price levels in advance, okay, this is not happening as the market's evolving. When the day starts, I've got the daily price. When the weekly starts, I've got the weekly price. And those prices are not going to repaint, they're not going to change, they're going to be updated, the daily every day, the weekly every week, the monthly every month. So if I've got a monthly price, it's full on for that month, the same for the week and the same for the day. So all of those upcoming highs, lows, the projected prices are going to be levels where the market is looking at. And it's really interesting to see. When I started using PST, sometimes it's just unbelievable how the market goes and touches it. In fact, I think we had that on the here we are. This is Bitcoin, because we had it on the daily today. All right, so this is Bitcoin, right? And if you take a look, if you get a little tighter here, I'll make this a little bigger if I can. Okay, now you'll see there's a number here, 66.44. That is a price of 110,663. Okay, and it touched that yesterday, okay, on that blue bar going up, right? And the high of yesterday was 110,671. So it was like $8 off, okay? With Bitcoin, $8 off is nothing, all right? So, and then what happened? And then the market started going down. As you can see, it sold off from that price, and now today's a Wednesday, it's kind of going down again. All right, so knowing these prices in advance is obviously the way to go, and what you want to do is to make sure you got pricing in advance, so you're not blurred in your decision making. Now you're going to have less risk with this one, because if you know the pricing and if you know the timing, then obviously your stop loss is not going to be in la-la land somewhere. Just like with the gold example I've got here today, right? Because I've got a time, my stop loss is really close. And in fact, you can see the market is coming back now towards me. So even if I do get stopped out, okay, like you can see here, it's not a problem because I put a 1 bar stop loss and the trade is already covered. And if it's not going to pan out for me, then I don't want to be there anyway. So if I just get my head out of the way there, all right, and then you can see that, even if I do get stopped out, there's no loss of love. Do I know the next trade hours? Yeah, I've got next trade hours here. Maybe during these trade hours, I'm going to be down here somewhere, and then I'll want to be buying at a right time and price at a low, and I'll check the PST indicator again as well. And on the daily as well, when I check it, I can see that I've got a level at 49, which is 3,301. So if I already know that, and if the market goes pear-shaped, then at least I know I can come all the way down into 3,301 down here. So if I'm going to trade again, then this price is going to be a good price, and if the time is right, I will enter it. So knowing these in advance allows you to really minimize risk, because your time and price correlation, and then you can be just relaxed and you can go about your day as well. Because, for example, today, by the time I opened the, I did the videos and put the hours on, and I knew that until 10:45 I had nothing really to do. Okay, so no big deal. Until 10:45, I took the dog for a walk, came back, had a cup of coffee, relaxed, and then entered the trade, posted it in the members area as well, and I told them they can cover the trade and so on. But by the time I actually posted, it was already covered. And here, as you can see, the market got stopped out, and that's fine again, because it's just a 1-bar stop loss. And if I am wrong, it's a good example actually. If I'm wrong, I don't want to stay in that trade for too long. This is why, for me, covering the trade is important, and if it goes in my direction, that's just lovely. Okay, and if it doesn't go in my direction, you really want a minimum tight stop loss, and that is the beauty of PST. Okay. All right, so yes, reducing risk. You know where not to trade as well. You know when to sit it out and how far the move is likely to go. This is really important for me because it allows me to cover the trade nicely. Once I got the trade covered, I'm like laughing. It doesn't matter if it goes against me. I can go do whatever I want during the day, take care of business, have family time or whatever. So this is really important, covering the trade and then let the rest ride. If it goes in your direction, great. If it doesn't, small loss and you get out. In fact, on this one, no loss at all, because once I cover the trade, there is no loss. Because the first take profit is going to be my stop loss level. Right, so it goes in my direction. I've already covered the trade. Then the second position can do whatever it wants. If it fails, no loss. Now you've got better entries and bigger profits, because if I'm entering at the right place and taking this into a daily PST level, here I've got 1 to 10 risk return. And if Thursday and Friday turn out to be swing days, then I'm either going to end up somewhere at the top or somewhere at the low. Okay, so if I'm thinking to myself, you know what, I'll take this to the highs for Thursday and Friday, then going long at trade hours to follow it into that 3,390, which is the PST daily, is just logical. Okay, which is exactly what I did. Okay, the second part of the trade didn't work out, but that is what I did. And so the first position had 1 to 1 risk return, the second one had 1 to 10. It's like huge, right? And calculating that in advance is obviously good for us, because you can say, well, that's a risk worth taking. Okay. Now you can use PST with any strategy. You want to scalp it with time, you can. For example, anybody who wants to scalp, you can use the PST and the time just to scalp the market and get out. So knowing the swing hours, the trade hours, and knowing the pricing, the PST, it will allow you to trade much better and efficiently if you're scalping the market, and also you'll have a really tight stop loss. If you're swing trading, bingo, because you got swing days in advance. So if I know swing days in advance, then I can say, well, we should go long. Like on this one, if you watch the previous videos on the channel, we knew this was going to be like a swing day. We wanted to go up, and we did, and we took a bunch of money here. It was at 1 to 6 or 7 risk return. It was really good, and it immediately added to the account like 1.2% in that one trade, and you can keep it open until the next day or get out at your PST level, which is normally what we do, get out at the PST level. So knowing these levels, knowing these hours with the pricing is really helpful. Also, if you're a portfolio manager, swing days and a PST can give you a long-term strategy, because if you understand that you're going to be buying on the lines here, whoops, let's see, if you understand you're going to be buying on the lines here, this is a weekly zone, so you can like follow that up at a longer term. You can keep that open for a longer time period because it's on a weekly bar, all right, and so forth. And then you got the targeting here. So if we're going to go for the longer term on the weekly, you can target 3,462, as you can see here, and you can also target on a long term the HCL1, the LCL1 line here, 3,640 is that thin blue line here. So knowing all these in advance allows you to give, it allows you to have a bigger vision of what's going on if you're a portfolio manager on the bigger time frame as well. The same thing on the monthly. And if you take a look here, we're on this LCL, where are we? Here we are. This is really high. This doesn't have a price, that's why. 88, yeah, this is out of bounds, as you can see. 88, it's just extreme level. I don't have a price, but on the new PST that will be done, I will have pricing for these. And in fact, I've got a few tricks up my sleeve for the new PST when it's completed. So as you can see, the whole idea is swing days, swing hours. It allows us to kind of trade more accurately. And this is actually clarity. This is a really new mathematical innovation where we don't have to bet on lines and all kinds of wiggles on our screen, but really have an understanding of, time and price. Okay, so this is the time, this is the price. Now look, I've got stopped out here on this one. The next time I'll be trading, it's going to be during these hours. So I'm going to check if during these hours I'm at an intraday PST level or not, or are we breaking out? Okay, because two things can happen, like here, you can break out or you can reverse, like kind of retrace back. So we'll see how that goes. I don't have any idea about the direction today. I don't. We can be going up for Thursday, Friday, swing day. We can be coming down to Thursday, Friday. I don't know. But even though I do not know, if I use the intraday PST for pricing, like here, look what the market just did here. It bounced off exactly at a PST price. This is a 15-minute chart. 43 is the value here. Dipped down just slightly under 43. Anybody who wanted to buy just using the PST would have gotten in at 3,336. 3,336 is right there. All right, just underneath the weekly pivot, and the market immediately bounced off. So if I wanted to get in just based on PST and scalp the market and go in a direction, I already have a price. And this is really good because your stop loss is going to be really tight, and it's giving you a clear-cut price. It's saying, listen, 3,336.1812. Okay, you're not going to get much more precise than that. So the PST indicator is very helpful, especially when we know the swing days in advance and also the trading hours in advance. So I hope this video helped you, and just another way to trade. Have a good one. All the best.